Hello and welcome to Gulf News special interview. We have Mr. Naveen Sharma. He's the immediate past chairman of ICAI Dubai. Also, he is the head of accounting and advisory services of IBPC in Dubai. He's also a director at Shiroya Group. There are many concerns for NRIs once they land here in Dubai or elsewhere in the world. You know, the first major problem that they have in terms of their tax liability. We are going to talk to Mr. Sharma and to get his perspective and his advice about what should NRIs do to see to it that they don't get a necessary tax notice from the income tax department. One of the things that NRIs read about is basically getting a tax notice back home. So, you know, as they say that NRIs need not possibly pay tax or even file for tax returns, what's your advice for NRIs here in Dubai, elsewhere in the world?
There are three important laws we have to take into consideration. One is, although everybody is talking about income tax, second we have to think about FEMA, Foreign Exchange Management Act, and third is the custom. If you are leaving India for good for the employment, from the day one you are non-resident. What it means to us? It means that only non-resident can open NRI accounts. You can have foreign currency accounts. Indians do not have that flexibility. So even if you are 5 days old, you can go to the bank, present your papers and open the bank account. So that comes under FEMA. Second, whether we can invest as a NRI or we cannot invest depends upon your FEMA status, which is Foreign Exchange Management Act. You can invest in mutual fund. So while you are here, your status is first governed by the FEMA, and once you cancel your residency in the UAE and you go back to India, from the day one you cannot have your accounts, you become resident. So the FEMA determines whether you can have the account with the banks or you can invest in India or not as an NRI. If you are here, you can open the bank account. Let's go, you have worked 10 years, 15 years, 20 years, and all income which is outside India is not taxable. So the fundamental rule is, if you are non-resident, then your income is not taxable. If you are not in India more than 182 days in a year, you are non-resident. If you are 365 days and more in India in the last 4 years and 60 days and more in India, in that situation you are also non-resident. So there are two criteria. One is the current financial year, which is 182 days, and last year 60 days and 365 days. So first we have to check our status, whether we are resident or non-resident. So once you check this status, then it comes your foreign income is non-taxable. But important question is, if you are wealthy, you have rental income, you have shares income, you have immovable property income, you have a running business which is coming to you, income coming from India will be taxable. Yes, first 250,000 or 2.5 lakhs is tax-free. If you have income of say 200,000 Indian rupees, need not to worry, because income tax start from 2.5 lakhs and above. So if you are non-resident and your income is less than 250,000, need not to worry. You need not to file any return. You need not to have the PAN account. You need not to have any tax filing. You can have a peace of mind. If your income is more than 250,000 Indian rupees, then you have to file your return, whether you are resident or non-resident. Then your rate of tax is 5%. Between 5 lakhs to 10 lakhs, it is 20%, and above 10 lakhs, if you are wealthy, you should contribute to your country by paying 30%. And of course, the surcharge is also applicable, as you know, in other parts. So once you are here, how to open the bank account is governed by the FEMA. Whether your income is taxable or non-taxable depends upon whether you are NRI or non-NRI as per income tax. And then you can file your return. Filing your return is very important. You should consult your tax advisor, chartered accountant, or somebody. You can file the return online. There is a lot happened in India over the last 10-15 years, and you can find your return online. There are tax practitioners here who will file your return. And where to file the return depends upon your address. If you are from Cochin, you should file the return in Cochin. If you are from Mumbai, you should file return in your Mumbai. And likewise. So now, say you lived for 15 years, and after 15 years you are going for good. So when we return back, planning is involved. As you are resident of UAE, you have your house, you have income, and now you are going good for India. So as far as whether you can have and keep your NRI accounts depends upon your status. So if you are going back from the day one, you are resident of India, if you are going good. So it means that your foreign currency accounts will convert to resident account. So this is, people have the misconception when they will go back, they have 10 year, 5 year, 2 years, so they need not to pay the tax. But once you are going as per FEMA, you have to, your resident status change. Now from non-resident, you become resident of India, and you cannot have your NRE, NRO and other accounts. There are some provisions which govern how long you can have, what is taxable, not taxable. Now as per income tax, it's very interesting. As per income tax, depends upon the days. When you are shifting your home back, first thing is your transfer of residence. You have household, you have car, you have electronics. If you are going back to India after 2 years, you can take a lot of goods, because you are not taking goods for commercial use. You are taking back for your own use. So whatever you have, there are 3 laws, 3 subsections are there. One is about your household. The time limit is 30 days. Once you land back in India, within 30 days, you can import back without paying any duty, because you are shifting your residence. Second comes your electronics. And if you are using the electronics, rupees 1.5 lakhs is completely free. If you have a car, Ferrari or supercar or your own car, you can take back that car. But there is a catch. In the UAE and Dubai, we use left-hand car, and in India, right. So custom law prohibits us to use or import left-hand car. Now comes your bank account in the UAE. As you are shifting back from NRI to resident, you have to be very careful in UAE. People sometimes ignore the UAE. You have your bank account, your salary account, your business account. All these accounts you need to close. You need not to only close, but you have to take no liability letter from the bank. Indian government is also thinking, once you will come back, you need some time. You have foreign income. You must have purchased properties. There is rental income. So as a fundamental first rule, if you are resident of India, living in India, your global income is taxable. The income from India and outside both are taxable. But there are some sub-clauses are there. If you are living in the UAE or outside India, and you are an NRI 9 out of 10 years, in that situation, you will be an ROR.
Not ordinary resident.
Not ordinary resident. Or if you are you have not lived in India 729 days in the last 7 years, you are also an ROR. In that situation, what will happen? Your taxation will be similar to non-resident. Then comes converting your account. If you have the NRE account, if you have the FCNR account, you have to see that these accounts you should convert to RFC account, resident foreign currency account. If you are an ROR, the ordinary but not resident account, so then what will happen? There are some charges you have to pay for maintaining your property. Sometimes you have to pay to XYZ reason. So you can keep some foreign currency account while you are in India as well. So that all accounts depends upon your length of stay in the UAE and outside India, and what you want to do with your foreign currency.
What if we have an immovable property back home and you want to sell it, and your status is an NRI? Do we need to pay capital gains on that property?
We have to ensure whether it's a short-term capital gain or a long-term capital gain. Now earlier, if you are holding a property for 36 months, in first 24 months, if you are selling the property, you have to pay short-term capital gain, and rates are very simple what you pay to your other income, like 5%, 20%, 30%. If you are selling for long-term capital gain, then the rates are less. If capital gain is less than 250,000, need not to worry. And if it is more, then you have to file.
250,000 capital appreciation.
Capital appreciation, I presume that there are no other income.
One provision that possibly that would impact everyone that was presented in the budget by Finance Minister Nirmala Sitharaman was the gift tax.
Yes.
That has changed the whole dimension about how earlier gifts were done without possibly exempting or trying to subvert tax. But now that cannot be done. Could you share your perspective?
The gift tax, there is a very important change has come, and the change is that the receiver of the gift, if I am lucky to have the gift from you, I have to pay tax if it is more than 250,000. If it is coming from my wife, exempt. If I coming from my parents, exempt. So there is a list of specified relatives. If you are receiving the gift from them, there are no change. But unfortunately, if I will receive from you or somebody else, I have to pay tax. And the limit is 250,000.
Would the government ask you for the source of that gift? Is that important from the giver?
Yes, because when you will receive in your bank account or you will transfer the ownership. See, when I will receive the gift, then I have to do two things. The money has come, if it is a cash, to my bank account. It is very clear nowadays that who has given.
What in case if there's a death, unfortunate death, of the head of the family in Dubai or in the UAE or elsewhere in the world? What happens in that case? What sort of precautions you should take? And one more aspect would be on prospective NRIs if they want to leave their residential status and go abroad. What's the checklist that you would advise them?
If you will die while you are NRI, so there are two things. You have assets outside India, and we have assets inside India. So we will take both of them. First, asset outside India because you died, say, in the UAE. Then what will happen? Your bank account will be frozen. And if you have a will, DIFC bill, where you have specified who will get your property, will be executed. If you do not have a will, then it will be based on a more complicated way, and I think it's outside the scope here. If you are in India, you have a will, life is very simple. That bill will be executed, and you can execute the bill, India bill, here in the consulate. If there is no will, then what will happen? You have the joint account, rules are quite different. Either a survivor will get the money. If it is a nomination, it will go to the nominee. If it is not all of them, then it will go as per the code, which go to the wife and the children. If you are coming here in Dubai and you work only for 100 days, so as per FEMA, you become non-resident. You open your bank account, right? After 100 days, you have gone back to India. As per income tax also, as you are not completed 182 days, you are still resident, and your income in the UAE will be treated as income in India. It will be subject to tax. But I will give you the formula of 3. Check your status in FEMA and income tax. This is the single most important thing. That what is my status? I am resident, I am non-resident, I am NROR or what? So this is the first thing which we have to see the status. Second, think whether my income is about 250,000, I have to file the return. So this is the second thing which we have to take care. And third and fourth most important thing is your documentation. When you leave, just don't leave in the excitement. See whether I have the will in place, to whom I want to give my income, how I want to pay my expenses. All documentation won't take time. This is the most comprehensive discussion on NRI and taxation that we have had in recent past on Gulf News. Thank you very much for your time, and thank you, sir, for your time.